Good afternoon, I'm Brigid Taylor and this is Currency Wars. Let's take a look at the news driving the currencies. The rand's traded between 11.80 and 12.08 this week as the dollar bulls continue to support the greenback. This was noticeable in the dollar as the yen strengthened, the dollar strengthened against the yen from 121 to 123 this week. The dollar to the yen broke through new highs, and this is driven by the dovish Bank of Japan's monetary policy expectations. The movement also serves as confirmation that the structural bull run that is still intact will continue for some while ahead, which is still a major risk for the rand over the coming months and quarters. Meanwhile, a Federal Reserve study released yesterday showed that American families are growing more positive about their financial well-being and their earnings outlook. This adds weight to the view that the Fed will look to hike interest rates when economic growth improves. Keep an eye out today for the US pending home sales and jobless data. These numbers will be of interest ahead of the second quarter US gross domestic product release tomorrow. Lastly, the weakness in the South African bond and equity markets over the last week has seen a notable portfolio outflow by foreigners. The daily bond flows suggest that just over 7 billion rand worth of net outflows since Monday the 11th of May has led to the rand weakening that we've seen. However, we could see some appetite for the local bonds re-emerge at these better levels. Right, now that we know the lay of the land, I'd like to welcome John Cairns from RMB. Welcome.
Yeah.
So let's have a little chat about BOJ. So that's quite an interesting scenario. I mean, that's been really the big currency move this week, that US dollar yen move. It doesn't sound significant, 121 to 123. However, it is new highs. I mean, we're back at those 2002 highs once again.
Yeah, so we broke the 2007 high early this morning after the BOJ, pushing up just, I think it was 124.14 that we went through. Yeah, look, there's been lots of speculation. The Bank of Japan has got a huge monetary printing program going on, as you know. Suggestions that they should up the pace of that monetary printing, and that's, of course, negative for the yen. Has little impact for us here unless you're exposed to the yen cross, but maybe what's more important is what it says about euro dollar.
Well, that's the thing, and I think even just in terms of the dollar, I mean, what you're seeing is that resurgence of a market that's coming back online, potential for interest rate hikes, and that's really the big underlying driver for people watching the show. It's something that they need to keep their ears to the ground on all the time. Dovish comments equals weakness in that currency. Bullish comments, you're looking for some form of strength in the currency. So let's talk about the US economy and what's happening from your view. I mean, there was that report out yesterday. Obviously, the Americans feeling a little bit more robust. The numbers obviously will have to speak for themselves. The Federal Reserve, how much weight are they placing on the data that's being released?
Yeah, so they're placing a huge amount of weight on the recent data. And the picture there, as you know, Bridge, has been early year, huge weakness in the economic data. I mean, it really, at the end of last year, it really looked like this US economy was surging.
It was weather conditions, right?
And then we had the port strikes and so on.
Yeah.
And then everyone came into the second quarter looking, is it going to improve? It didn't improve through April, but suddenly now in May, we're starting to get that strong data back. And that's vital. The Fed expectations for euro dollar, it can really change the picture for the rand, both for dollar rand and euro rand, quite considerably.
So what is your view then based on that? I mean, obviously you're going to be keeping an eye on the data. You know, there's been some speculation around where the emphasis is being placed, because a lot of emphasis is historically, and I mean certainly in the last year, being placed on those non-farm payrolls, and particularly if we're looking at the jobless claims on a weekly basis, just to give us a bit of impetus. However, what's starting to come through now is more around disposable income. How do people feel about the money that they're earning? Are their wages in fact increasing? These types of things. So what are the numbers that we need to keep an eye on?
So non-farm payrolls, that's on the 5th of June, and maybe we can talk about that, because there's
that's
a huge
monthly number, right?
That's a monthly number, but there's a huge amount of event risk around 5th of June. Maybe we can come back to that. Yeah, non-farm, the weekly jobless claims gives you an indication. But you mentioned the other very important one, just any signs of wage growth. So we've had US wages growing at around 2% per year post-crisis. Now with unemployment down 5.4, going down to 5.
Brilliant.
Do wages start to accelerate? A leading indicator of inflation, then the Fed's going to have to start slamming on the brakes. Income growth has been good for US households, but spending growth has been poor. There's a bit of a disconnect there. No one really is quite sure why are US households not spending this oil windfall. lower rates, why they're not going out there and spending. If they do, again, it would bring forward those Fed hike expectations.
Maybe it's a psychological thing. I mean, we talked about this, you and I previously, is about the psychology of a massive crisis like that. And when you lose your home, and when you lose your job, and when you suddenly put into a massive crisis where all of your primary functions are at risk, to now go back in, despite the fact that things seem to be okay, you're a lot more cautious in the way that you go forward. So the US consumer prior to 2008 was very robust in spending. In fact, they had portfolios up to their eyeballs. They owned property, they owned equity, they owned everything. Now there's a little bit more conservatism. So that robustness is unlikely to take place, or do you think that it'll be a slow progression back into the playing field that we experienced prior to 2008?
Yeah, so more on the latter, a slow progression back, and multi-year we got to worry about it. But the key point for all of us is, was your question. We're watching the data. The Yellen said they're data dependent. You get some strong data, the Fed expectations will be brought forward. The moment pricing is about 30% for a September hike, 60% for December, the rest may be pushed into 2016. So it's already been brought forward a bit. A couple of months of strong data, September will be the call, and that could see dollar rand pressing upwards again.
Well, for sure. I mean, if we look at, so going back to the comments around monetary policy, so we look at the likes of the Bank of England, you know, they're conservative with regards to their monetary policy. We look at the likes of the Eurozone. I mean, they are still printing money and looking for some form of quantitative easing. Bank of Japan, very dovish. South Africa's been on the middle ground because of the fact that we've got slow growth and obviously we've got this inflation predicament that we're in. However, the Fed is the one that's the key. So if South Africa, you know, if we look at the inflation scenario going forward in South Africa, what do you think the likelihood is of the SARB coming, you know, catching up in terms of interest rate hikes, and what that offset will be should we see a September hike out of the Fed? Okay,
so it's a very good question. So first of all, we at RMB, we've changed our view on local rates. I mean, the governor was very hawkish in the last statement. Last MPC, we've seen two deputy governors making very hawkish statements as well. They're talking about rate hikes, plural, this year. So we're thinking they're probably going to move in July. Yeah, you say it. Growth's 1.3%. Okay, maybe that's a bit too low. Maybe we'll accelerate back to 2. Inflation's at 6. Not a great environment, but the message we're getting from the SARB is they're wanting to hike. What's interesting then is most other central banks have been easing policy. So you're talking about the Bank of Japan, but 27 major central banks have eased policy this year. Why has the rand been doing relatively well?
Well, because we've kept policy unchanged.
Exactly,
right?
Brigid, exactly right. It's not that we've increased rate, but everyone else is cutting, and it's made us look better. If we now go and hike rates, we look even better. I mean, the rand has done well this year, and maybe that can continue if the SARB keeps going ahead.
Well, certainly. I mean, it's been on a weakening bias, but it's remained within that relatively narrow range. I mean, if we look at the euro rand, it's almost been unmoved since last week. So, you know, we saw that initial strengthening back down to that 13.10 level, but since then it's petered around 5 cents here or there.
No, but okay, so sorry, I'll just jump in there. So dollar rand, just that trend line, it's amazing. I mean, as a technical person, you're probably better than me, how that trend line, dollar rand just to the upside. But look at the other crosses. Euro rand, 15.30 January last year, we're down at 13. I did a study, 20 of the most traded currencies. Since June, the rand's strengthened against 14 of them, weakened against only 6 of them. So relatively, the rand is doing quite well this year.
And that's kind of, in my mind, is reflective of an interest rate play, more than an underlying fundamental reflection of the currency.
Definitely,
so that's ultimately what the big picture is here.
Sure, yeah.
So now that we know where we stand, and we're going to ask John to have a little consensus around where the rand's going to trade over the next week.
Okay, so...
Okay, John, so now's your time to pull out the big guns. Let's have a look at the levels that we can expect for the week ahead.
Okay, so I'm worried about dollar rand upside. I think that euro dollar trend is very strong. Euro dollars come from 115 to 108. US data has been better. If euro dollar keeps going lower, which I expect, then the pressure will be on the upside on dollar rand in the short term. So importers need to be very wary of it, particularly ahead of the 5 June event risks, non-farm payrolls, so on. Euro rand, I think we had the bout of volatility. Now we're just sideways at that 13, 15 level.
Okay. So what's your bottom in the range of the dollar rand that we can expect?
Well, I think right here. I mean, I don't think we're going to go much lower than 12 in the next week. Maybe up to the 12.25s, possibly even higher if euro dollar really gets going.
Okay, thank you so much, John. Much appreciated.
Thank you.
So just in conclusion, the trading strategy for this week is Event risk is really around the 5th of June, and that's predominantly because of the non-farm payrolls. That speaks to the Federal Reserve and their potential for hiking interest rates in the United States. And with this big play on interest rates globally, that's the big driver of currencies. So for now, we expect dollar rand to continue to weaken, looking for sort of that 12 level as your base and potentially trading up higher, maybe up to 12.25, 12.30. However, the rest of the currencies, watch the euro dollar, because that will determine also some of the rand weakness that we can expect. However, for now, for the week ahead, expect the euro dollar to trade within that 13.05, 13.20 range. Until next week, you're welcome to send any questions or comments to @CNBC Africa #CurrencyWars410 or to myself at Brigid R. Taylor for your personal response to the FX markets. Until next week, good luck in the trenches.